today's video, I'm walking you through 8 ways to lower your car insurance rates without cutting essential coverage or getting stuck in the fine print. What's up, you guys? My name's Ashley, and if you've noticed your car insurance creeping up or you're just tired of overpaying for coverage that doesn't match your needs, you're in the right place. These are tips you can actually use, and I'll explain not just what to do, but why it works and how real people are saving hundreds of dollars a year. Let's get into it. So number 1 is to shop around and compare quotes every single year. The number 1 mistake people make is staying with the same insurance company for too long without checking what else is out there. Car insurance companies change their pricing constantly. It's based on a bunch of things like your zip code, age, accident trends in your area, and even what kind of car you drive. That means a great rate this year might be overpriced next year, even if you haven't changed anything. Just as an example, let's just say you're paying $168 a month for full coverage. Then you go and get quotes from 3 other companies and end up switching to a policy for $121 a month. Same coverage, different provider. That's a $564 saving for just shopping around. So even if you're happy with your current company, get in the habit of comparing quotes every single year. Most companies don't reward loyalty the way you'd hope, so you have to advocate for yourself. If you want to use a quote comparison tool for car insurance, use our link in the description below. It's super simple and super easy to use. So all you have to do is enter in your zip code, how many cars will be on your policy, how old you are, if you're currently insured, if you own a home, do you own a Kia or Hyundai, have you or a family member honorably served in the US military. So all you have to do is click submit, and then they'll give you a bunch of different options that you can choose and shop around from. Number 2 is to raise your deductible if you have the savings to do so. Your deductible is what you pay out of pocket before your insurance kicks in after a claim. The lower the deductible, the higher the premium, and vice versa. If you rarely file claims and have some money set aside in savings, increasing your deductible can be a really smart move. For example, if you raise your deductible from $500 to $1,000, you could save between 10 to 20% on your premium. Let's just say, as an example, you increase your deductible to $1,000 and you immediately save $22 per month. Over a year, that's more than $260 back in your pocket. But again, only do this if you're confident you could actually afford that deductible in an emergency. Otherwise, you might be saving now but struggling later if you need to use it. Number 3 is to bundle your insurance policies. Bundling means getting more than one type of insurance from the same company, like combining your car and home insurance. Most providers offer a bundling discount that can be anywhere from 10 to 25% off each policy. Let's just say you bundle your car insurance with renter's insurance. You can actually save $320 per year, obviously depending on what company you go for and what their bundles look like. But again, it's the same coverage, same deductible, just combined under one provider. Even if you don't own a home, you can often bundle with renter's insurance, life insurance, or even pet insurance. Just make sure both policies are a good fit and not just cheap on the surface. Bundling only works if the coverage actually serves you. Number 4 is to take advantage of every available discount. This is a big one and most people are missing out on it. Insurance companies offer a ton of discounts, but they don't always advertise them clearly, and unless you ask, you might not know what you're eligible for. Some common discounts include safe driver discounts if you haven't had any tickets or claims. There's also good student discounts if you or a child on your policy has a high GPA. There's also low mileage discounts if you drive less than average, as well as anti-theft and safety equipment discounts, and they even have pay in full or paperless billing discounts. For example, you can save a certain amount of money a year just by switching from monthly payments to an annual pay in full option. That's money back for something that took less than 2 minutes to change. Always call your insurance company once a year and say, can we review my policy and make sure I'm getting all the discounts I might qualify for? You might be surprised at how many apply. Number 5 is to improve your credit score. This one surprises a lot of people, but in many states, your credit score plays a role in how much you pay for car insurance. Insurance companies use something called a credit-based insurance score, which looks at your credit history to predict how likely you are to file a claim. It's controversial and banned in a few states, but where it's allowed, the difference between a good and bad credit score can mean hundreds of dollars per year. Just as an example, maybe you're in the low 600s and you improve your credit score to over 700. You can have your car insurance drop by maybe even $400 a year without changing anything. Again, all these numbers are estimates, so take it with a grain of salt, but I just want you to understand how much of a discount you can get depending on your credit. So if you're working on rebuilding your credit, know that it can pay off in more ways than just loans or credit cards. Number 6 is to reevaluate your annual mileage. Most people don't think twice about the mileage. They estimate what applying for insurance, but it's actually a factor in your premium. If you used to commute daily but now work from home or recently changed jobs and drive less, update that information with your insurer. Insurance companies charge more when you drive more because the risk of an accident goes up. So just as an example, let's just say you reduce your stated annual mileage from 15,000 to 8,000 miles a year. Just as an example, you could save up to 8% on a policy. But again, this differs between policy to policy, so make sure you are checking in with them. So also make sure you check your actual odometer average and call your provider to update it. It's a super simple way to save if your driving habits have changed. Next is to add safety or anti-theft features to your vehicle. So insurance companies reward drivers who make their vehicles safer. That includes things like anti-lock brakes, daytime running lights, airbags, and more recently, features like blind spot monitoring or lane departure warnings. If your vehicle came with these, or if you've added anything like an alarm system, dash cam, or tracking device, let your insurer know. Some companies offer up to a 5% discount just for having an anti-theft device. Even small changes to your vehicle can make a difference in your premium, especially if you're driving a car that's commonly targeted for theft. Number 8 is to review your coverage levels regularly. Finally, one of the most overlooked ways to save is simply reviewing your coverage every year to make sure it's still matching your needs. For example, if you're driving a 15-year-old car that's worth $3,000, you might not need full collision and comprehensive coverage. The cost of coverage could exceed the value of your car in an event of a total loss. As an example, let's just say you drop full coverage on an aging car and switch to liability only. A premium could go from $139 a month to $81 a month. And you can use the savings to start a car repair fund. Of course, if your car is newer or financed, full coverage still makes sense. The key is knowing when to scale back and when to keep the coverage that protects you best. If you're ready to take action and start comparing rates, I highly recommend using the insurance survey that is in the description below. It's free, it takes a couple minutes, and it will really help you see if you're overpaying or if it's time to switch. So whether you're renewing or just want to feel more confident in your coverage, it's such a great place to start. Lowering your car insurance rates doesn't mean cutting corners or driving uninsured. It means being smart, informed, and proactive, whether it's shopping around, bundling policies, or taking control of your credit and driving habits. Every one of these tips is something you can act on. And when you start combining them, the savings can be huge. This video is really important because I just know how frustrating it can feel like your insurance rate just keeps going up for no reason. These strategies can really help you save real money, and I really, really hope they do. If you found this video helpful, go ahead and like and subscribe to the channel and leave any comments or questions below. We'd absolutely love to hear from you. This channel is dedicated to helping you make smarter, simpler decisions when it comes to insurance and protecting your finances. Thank you so much for watching, and I'll catch you in the next video.